But at the end of the day, this is a mature company now that is facing growing amounts of competition from a lot of other services that weren't even around 2 years ago. So yes, it's going to change. Growth is not going to be as strong year to year and quarter to quarter as it has been.
Hey gang, it's Thursday, January 27th. Paul and listeners, welcome to the Behind the Numbers Daily and eMarketer podcast made possible by Smartly.io. I'm Marcus and today I'm joined by our principal analyst who covers TV and video and also heads up our advertising and media practice is Paul Verna.
Hey, great to be here. Thanks for having me.
Hey chap, thanks for hanging out. Today's fact, Reebok, the brand, the clothing brand, sneaker brand, was named after an African gazelle. Founded in 1958 in Bolton, England, Reebok was an extension of the J.W. Foster & Sons athletic footwear company. Two of the founders' grandsons, Joe and Jeff Foster, formed a companion company called Reebok, having found the name in a South African dictionary, which was won in a sprint race. The dictionary was won in a sprint race by Joe Foster as a boy. The name is Afrikaans for the grey Reebok, R-H-E-B-O-K. Definitely said it wrong, so there's the spelling, which is a type of African antelope. Is Reebok big over here, Paul?
Yeah, but I had no idea about the name. And when you started out and you said it was named for an antelope, I thought maybe it was a specific one that someone had as a pet or maybe in a zoo. But it's interesting that's the Afrikaans word for it.
Yeah, named after all of them. By here, I mean America. I'm in America now, so I was just checking that you guys have even heard of it. Anyway, a few other names, origins of different names. Nike, Paul, you know where that comes from?
Greek god?
Greek goddess of victory.
Goddess,
yes,
sorry.
Very close,
Yeah.
very close. Another interesting one, $240 billion market cap firm Adobe was named after Adobe Creek, a river in Los Altos, California that ran behind the house of one of the founders, John Warnock.
Interesting.
I could go on forever because I did a lot of research on these, but I'll stop there.
Well, maybe not forever, but do you know about Adidas and Puma?
Oh.
Adidas named after one of the founders whose nickname was Adi and the last name is Dassler, so Adidas. But then his brother, Rudolph, I guess branched off from the family business, or maybe there was a dispute. I don't know the particulars, but I know that the brother established Puma, which, has then became one of Adidas's big rivals.
Yeah, fascinating where all these names come from.
Yeah.
Anyway, today's real topic, Netflix in Q4. Paul, today we're talking all about Netflix and how they did at the end of last year. The Q4 numbers are starting to come kind of trickling in, and Netflix is one of the first to report. So we're talking about them and their October, November, and December performance. We'll start with the user highlights. We'll move to revenue. We'll talk a bit about their price increase and what that means, and then look a little bit into the mini future with what we expect from Netflix in the short term. In other news in the second half as always, but for now, user highlights, Paul. Netflix subscribers neared 222 million in Q4, up 8 million from Q3. That's in keeping with the quarter-on-quarter gains it saw in Q4 of 2020, but year-on-year growth in Q4 was down from 22% last year to 9%. This year. The streaming giant added over 1 million new US and Canada subscribers in Q4, reaching 75 million. The problem was the year-on-year growth was 2%, in keeping with the 1% year-on-year growth they saw in Q3 and 1% they saw in Q2. So, Paul, the overall user growth figures this quarter were blank.
It was underwhelming compared to what the Wall Street consensus was, what they were expecting. So unfortunately for Netflix, that translates to almost like a disaster in the eyes of Wall Street. And we saw the hit that the stock took after the fact. I think it was a direct consequence of their subscriber numbers.
Yeah, down 20% in initial trading. Paul, the most interesting user figure this quarter to you was blank.
It was the fact that the U.S. actually outperformed expectations, and that has not been the pattern. The pattern is that there's more growth overseas, which there still is. There was in this past quarter, but the fact that they did a little bit better in the U.S. than had been expected was a little bit of a revelation.
Yeah, and you're talking about the millions there, the fact that they added over 1 million to the US and Canada subscriber numbers, paid subscriber numbers, compared to the 70,000 they added in Q3. So surprising to see that reach the number that it did. What's concerning, as I mentioned, is the 2% year-on-year growth.
Right.
And we'd already mentioned in Q3, Paul, when we talked about this, that US and Canada subscribers, they've officially plateaued. They've been at 74 to 75 million since Q4 2020.
Right.
What's concerning now is the overall subscriber growth fell from 22% year-on-year to that 9% this Q4. Pop a grade on it for me, if you would, Paul. Overall user growth figures in Q4 for Netflix.
I give them a B. I know that Wall Street really hit them over the head, but I think that Wall Street tends to overreact. It wasn't a big miss compared to what was guided. It was actually marginally lower than what they had specifically predicted. And I just don't think it's an unmitigated disaster. I think it's obviously not great for Netflix, and we can talk about, what comes next and all of that. But in terms of the size of the miss, it could have been much, much worse. They also, and maybe we'll get into this later, but they actually beat expectations on profit. So, if we're talking just about subscribers, I'll say a B.
Okay. Yeah, law of large numbers. The growth has to come down at some point. And if you look at their overall subscriber numbers worldwide on a bar chart, it's just a staircase upwards, to be perfectly honest. It's just the growth is starting to come down to earth now. Is going from Q1 of 2019 forward quarter by quarter. It goes 25, 22, 21, 20 in 2019. And then 2020 hits and they get the 2020 pandemic boost. It goes 23, 27, 23, 22 year-on-year growth in 2020. So it should have probably come down that year, Paul, but obviously was boosted by people staying at home in the pandemic. And then it goes 14, 8, 9, and 9 quarter-on-quarter. That's each of the quarters year-on-year growth for this year. So has to come down at some point. And to what you were saying, still doing relatively good, all things considered. Let's talk about their revenue. The streaming giant made $7.7 billion in Q4, $1 billion more than it made last Q4. Despite year-on-year growth slowing to 16% this year from last year's 22%, revenue from US and Canada grew at the same pace as last Q4, about 11 to 12%, and still accounts for just under half, 43% to be exact, of all the money Netflix makes coming from that region of US and Canada. Paul, the revenue growth figures this quarter for Netflix, being Q4, were blank.
Right in line with expectations.
Yeah? How come?
Pretty much exactly what was guided, what Wall Street expected. And in that sense, I think it probably prevented the stock sell-off from being even worse than it was in the days right after. So, yeah, I think it wasn't too much of a surprise that, it kind of came in right in that ballpark.
The most interesting revenue growth figure this quarter was blank.
I think the fact that they're keeping pace with previous, pretty good sequential growth from Q3 and in line with the year-over-year growth they had last year at this time. So, yeah, I think it's not like a huge observation, but I think the fact that they're meeting expectations on revenue is definitely a good indicator for them.
Let's pop a grade on their revenue figures, Paul, for Q4.
I'll give them a B+ for that because they met expectations, but in order to get into that A letter grade, they would have to have beat expectations.
Okay. So overall combined grade, you're going to give them a B+, be generous, or overall a B in your opinion for users and revenue?
I'll go with the B+ only because earnings were actually higher than the Wall Street consensus. So they sort of beat on earnings. They were in line on revenue and they missed on subscribers. So overall, I'm going to say the grade is a B+, but I just want to make one comment about those three metrics that obviously a company is in business to make money and that's what investors care about. But with Netflix, the subscribers are really the key metric because everything revolves around that. There's a 100% direct correlation between subscribers and revenue, unlike a lot of other companies that compete with Netflix that have more multi-layered business models. So in that sense, I think the miss on subscribers and also the fact that their guidance for Q1 of 2022 on subscribers was softer, than what had been expected. So those are definitely points against them, and that's why I think they were punished.
Right. So Paul, on the Q1 guidance for this year, Netflix expecting to add 2.5 million subscribers, down from the 4 million it added in Q1 of last year. That would make it one of Netflix's slowest opening quarters in years. So not great. On the other hand, Sarah Fisher of Axios writes that bullish analysts like Lightshed Partners' Rich Greenfield argue companies like Netflix and Disney have a long runway ahead, and that the total addressable market globally could be upwards of 600 to 800 million subscribers. So, Paul, in the context of these two different perspectives, do you lean more optimistic or pessimistic when you peek into Netflix's immediate future?
Well, first, I get the fact that Q1 typically has been a strong quarter for Netflix, and part of the reason is that people buy new devices around the holidays, and then they get to use them. So in that sense, I think it's maybe a bit of a dark flag, but I do think, back to your comment about the law of large numbers, and back to the analyst comment from Rich Greenfield, I'm basically optimistic about Netflix. I also think that Reed Hastings in particular is a straight shooting CEO who tells it like it is. And he made some comments after this earnings call that basically admitted that he doesn't really know, what's going on. I find that very refreshing. And I think it's a really strong leadership quality to actually be that transparent. And that leads me to think that he's not going to be pig-headed about pursuing a strategy that's not going to work. He's just going to try to find the answers. But at the end of the day, this is a mature company now that is facing growing amounts of competition from a lot of other services that weren't even around 2 years ago. So yes, it's going to change. Growth is not going to be as strong year to year and quarter to quarter as it has been. And that's just the reality of the business they're in.
Yeah, and a maturing company. Finally, Paul, on Netflix, they raised their subscription prices in the US and Canada for the first time since 2020, was a recent piece of news. Video streaming giant increased the monthly cost for its US basic plan by $1 to $10. Its standard plan increased to $14.50, pretty much from $14, so up $1.50, and the premium plan went from $18 to $20. Your reaction to the recent price increase?
Well, I've said before that, they have some runway to raise prices, and they have raised prices over the past 2-3 years. This is probably the last time they can do it without really getting on the wrong side of their consumer base. And part of the reason for that is just the psychological aspect of getting to that $20 range, because then once you cross that, then you're like, above 20. And, so I think it's, they're not going to be able to raise prices easily anytime soon. On the other hand, prices are going up across the board. So I think people are definitely not happy about that. And they're going to have to start cutting back on certain subscriptions. But on the other hand, Netflix they're almost like blending in with everyone else because, a lot of prices are going up for a lot of services. And at the end of the day, it's not like a huge increase. And I think also people perceive the value to still be there. They think they're getting quality content, and they've always been willing to pay. And I don't think that's going to change dramatically with this.
Yeah, the standard price of a Netflix plan now just 50 cents above where HBO Max lives, but obviously a little bit higher than a Disney Plus. Paul, it's funny you should say that because last weekly listen episode last week, I said on Uncommon Knowledge, which is one of our new segments, my unpopular opinion was that I thought Netflix could increase their prices by 50% in the US and that none of their subscribers would leave. And Michael Pachter, an MD at Wedbush Securities, recently told The Verge, does the consumer feel that Netflix is a good value at the price? If the answer is yes, overwhelmingly they can raise prices and pretty much nobody quits. If you use Netflix every day, then you kind of don't pay attention. My rationale was that it's kind of like the privacy paradox. We say one thing, we do the other. And I feel that that's the case with this. We say, a lot of the research suggesting that, no, I would unsubscribe to Netflix if they raise their prices, but more and more people are adding and stacking SVOD services, and the price keeps going up and no one seems to be leaving. There's going to be a cutoff at some point, but I really think they could throw their prices up to, that standard plan from $14 instead of $15.50 to $19.99. And realistically, when it comes down to it, people would pay the extra $5-6 for the month.
Yeah, I think you're probably right.
They wouldn't do that just to make sure. I don't think they're going to jack it up that high.
Right. No.
But I think that they could if they wanted to just throw caution to the wind and say, the hell with it.
Yes. I mean, thinking about it a little more, I might have overstated it when I said, this is the last one they're going to be able to do in a while. And I think, by the way, Michael Pachter, I respect the guy a lot. I've been on TV shows with him, and he's a really smart guy, but he is a notorious Netflix naysayer. So
oh, okay.
That's just kind of where he's coming from as an analyst. But I think that a lot of this really comes down to the quality of the content. And as long as they keep putting out content that people want to watch and feel like they need to watch, they're going to have more amplitude for price increases.
100%. Final thought from me, speaking of content, streaming services are spending an insane amount of money on original programming. Ampere Analysis estimates that global original programming spend will exceed $230 billion in 2022. If you're trying to conceptualize what that even means, that's Elon Musk's, who's the richest person on the planet Earth, that's his net worth. So the richest man on the planet could fund the original programming content budget for 1 year. That's all we've got time for the lead story. It's time now for the halftime report. Paul, a takeaway from you for the first half on how Netflix did in Q4.
My takeaway is everybody just take a deep breath. You know, I was asked on Bloomberg TV if it's time for new leadership at Netflix. And I think that kind of thought process and line of inquiry reflects this idea that like the sky is falling for Netflix. I don't think that's the case. This is a market leader that's going to remain a market leader for years and years. And yes, they have things to correct and they're going to have slower growth, but it is not time for new leadership or time for anyone to run for the hills.
Yeah, absolutely not. I mean, nearly $8 billion in the quarter. That went up double digits. 222 million subscribers. That went up nearly 10% year on year. And profitability was also up. So things are still heading in the right direction, even if they've gone from, sixth gear down to fifth or, third down to second, whatever you want to say. That's what we've got time for the lead story. It's time now for In Other News. But first, a quick word from our sponsor, Smartly.io. Hi to all the social media marketers out there, listen up. Social platforms have become more important than ever for brands, you know this. So if you're looking to scale your social advertising in 2022, look no further. Smartly.io is number one in social media advertising. They help brands automate every step of the process by combining creative production and ad buying to unlock greater performance. To get the brand new 2022 social advertising trends report, go to smartly.io/eMarketer. Right, folks, we are back today in other news. The NBC readies its once-in-a-lifetime sports doubleheader, and streaming giants get more serious about children's shows. Story 1. NBC readies once-in-a-lifetime sports doubleheader, writes Sarah Fisher of Axios. She's talking about NBC soon broadcasting the overlapping Super Bowl 56, this year's Super Bowl, which happens on February 13th, and the 2022 Beijing Winter Olympics, which happen February 4th to the 20th. But with less than 2 weeks to go before the start of the Winter Games, several Olympics sponsors are skipping the show as geopolitical tensions rise between the US and host country China, notes Stu Wu and Georgy Kanchev of the Wall Street Journal. NBC Universal reduced its ratings expectations for the 2022 Beijing Winter Olympics following flagging ratings from the Tokyo Summer Olympics and pressure from advertising partners. Per our sister company Insider, writes Insider Intelligence analyst Daniel Konstantinovich. Paul, you expect NBC's sports doubleheader to be blank?
To be a big challenge for them.
How come?
Well, they have a lot of counter currents, a lot of things working against them. The geopolitical tensions you mentioned, the pandemic doesn't help, the time zone difference doesn't help, and the recent ratings drops don't help. It also doesn't or hasn't helped them that they really botched the streaming aspect of the Tokyo Olympics with a very muddled strategy. So I think what they need to do now is first, and I think they've already addressed this, is they need to clarify how and when people can stream the Olympics coverage. And I think they've done that through Peacock. I think they can also help themselves with this double whammy that you mentioned because they can cross promote the Super Bowl and the Olympics. And then the other thing I think they can do is use their new measurement approach that they recently announced to basically tell a better story that doesn't just focus on Nielsen TV ratings, which are sort of outmoded or maybe insufficient in terms of measuring how people actually view.
Yeah, they did say that all live events will now be available to Peacock's premium tier subscribers. So they're hoping to, Paul, to your point, to have a better experience for viewers because last time things were very scattered. We'll see what happens. Story 2. Streaming giants get more serious about children's shows, a cost-effective way to expand your subscriber base, notes an Economist article. A study by Parrot Analytics found that demand for kids' shows in America, measured by video views, social media mentions, things like that, grew nearly 60% from the start of 2020, pre-COVID, to last September 2021. Demand for other genres rose by just over 20%. Pew Research recently found nearly half of parents think popular young person destination YouTube exposed their kids to inappropriate content. But never fear, Disney is here. The Economist points out that Disney, arguably the child-friendliest brand of all, has created a new role tasked with seeking out external children's programming. Paramount Plus promoting its Nickelodeon trove to parents, and in September, Netflix paying over $700 million for the Roald Dahl Story Company, which owns the rights to beloved tales like Charlie and the Chocolate Factory, the article points out. Paul, streaming giants getting more serious about children's content, in your opinion, is blank.
It's very consistent with two of the biggest trends of our times, which is, people being stuck at home and kids being stuck at home and parents lowering their threshold for, what kids do on their screens because they, have felt that they almost had to under the circumstances. So I think all of those things create a perfect climate for more interest and more value around children's programming.
Yeah, the article also noting 3 benefits to focusing on children's programming. 1, they cost less to make, by and large, than entertainment for adults. 2, they tend to have a longer shelf life, because kids will just watch the same thing over and over again. I wish I could do that. I'm kidding. I listen to the same 4 songs on Spotify. I'm 100% a child. And then number 3, the merchandising opportunities as well in the form of toys. So yeah, it seems like a very lucrative and obvious next step for streaming players.
Well, as my 5-year-old neighbor says, Coco Melon is for babies, but I watch it anyway. That's a direct quote. Yeah. So, and those kids, he and his brothers watch it all the time, even though it's quote unquote for babies.
This is the neighbor who decided on what you and your wife should go to dress up as for Halloween.
Exactly. Yeah. These neighbors basically dictate just about everything about our lives these days. They have that much power. Part of it is because they're always like dressed up in superhero costumes. So, they wield their power very easily. They web our house, they use lightsabers, they use all sorts of weaponry and vehicles against us. So
it's hard to disagree with Spider-Man.
Yeah.
That's all we've got time for this episode. Thank you, Paul, for hanging out.
Thanks for having me, as always.
And thanks to Victoria. She edits the show. Thanks to everyone listening. We'll see you tomorrow for the Behind the Numbers Weekly Listen, an eMarketer podcast made possible by Smartly.io. All right, if I just burst into King by Years and Years, don't just go with it, because it's stuck in my head and I keep singing it.
I support it.
The most inappropriate times, thank you. You wouldn't, well, when you hear me sing it, maybe I'll be your nemesis. Maybe you'll change your mind, but thank you for bearing with me. It's a good acoustic. They've got a good acoustic version, which on Spotify, so check that out. Oh, yes.
We can't afford this track.
We definitely can't afford this track. We could afford a few seconds, can't we? Why don't we just do karaoke? Forget Netflix. Sorry, Netflix.